Going over IRS Form 5498, IRA contribution information. So taxpayers probably will receive this form in either late April or May of the year following their tax year. So for example, this is the newest version of IRS Form 2024 or IRS Form 5498. This is for the 2024 tax year, which means these actually would start going out in 2025. What you might see, however, is the 2023 version, which was for the 2023 tax year. I'm using this as the example as it's the most current on the IRS website, and there are not a lot of changes. So we'll go through this form specifically so that you can understand what is being reported to you. And at the end of the video, we'll talk about some tax planning opportunities that you may have with this tax form. So this is an informational tax return. As most people know or know from other videos on this channel, copy B is the copy we're working on. Copy A generally is for the IRS. So this is the copy that would go to the IRS. There is, other than just the bright red part that knows or that lets you know that this is the IRS version, there's not a whole lot of significant difference. So, and then there's a copy C that's usually for the custodian's records. As with most information returns, on the left-hand side, you'll see the taxpayer information, both the account holder's information as well as the trustee or the issuer. That's the fancy name for the financial institution. So we'll go ahead and start on the left-hand side of this form as we go through it. So at the top, you'll see Acme Investments issued this form to John Doe. We have their taxpayer ID numbers. The trustees will likely be an employer identification number. The participant's TIN is probably going to be their social security number. It may be redacted on your version, but it will not be redacted on the IRS's version. Just below that, you'll see the participant's name. So in this case, John Doe, the street address, and then down at the bottom, the account number is not required unless the taxpayer has more than one IRA at the same institution and the institution is issuing multiple 5498 forms. So this might happen if, for example, John Doe had a traditional IRA and a Roth IRA, and let's imagine that he did his $6,000 of contributions and then he did a backdoor Roth conversion. He would then receive a copy of Form 5498 for both IRAs. So the IRA contribution information would be reported for the traditional IRA because that was the money that he first deposited into. And then if he did a Roth conversion, he would receive a 1099 from that, a Form 1099-R from that traditional IRA because that's money coming out. But because it's a Roth conversion, it would go into the Roth IRA, and he would receive a Form 5498 for the Roth IRA as well. So you can expect that, anytime you do Roth conversions, and if you have multiple accounts at the same financial institution, there is a possibility that you would see your account number at the bottom. Or even if they're not required to report your account number, you still might see that there. So on the right hand side, we're going to see a lot of different fields, and we're going to go through each of these step by step. So in box 1, IRA contributions for the year. So these are specifically just straight up Roth or IRA contributions. They do not include any of the items that are set out here. So no rollover contributions, no Roth conversions, no recharacterizations, no SEP, no simple, no Roth IRA contributions, no postponed or late contributions, and no repayments. So in this case, this would be John Doe putting $6,000 into his traditional IRA. In box 2, we're going to see rollover contributions. This would be any rollover to include a direct rollover to a traditional or a Roth IRA. It could be a qualified rollover contribution, like a military death gratuity or SGLI payment under the HART Act for military beneficiaries. That would also be included in box 2. Any conversions from your traditional SEP or simple IRA to a Roth IRA would show up in box 3, not in box 2. So a rollover is different from a Roth IRA in that it is a rollover between two similar tax treatment accounts. So, like a 401k, a pre-tax 401k into a traditional IRA. In box 3, we're going to see any Roth conversion amounts. So let's imagine that during the same year, John Doe, had a Roth conversion. If this was selected as a Roth IRA, then you would see Roth conversions in here. You would not necessarily see a Roth conversion amount from your traditional IRA. So this would be, if this were his Roth account, you would see the Roth conversion in his account, but you would not see it if it were into his traditional account. In box 4, this is a recharacterized contribution. So a few years back, the IRS generally put the clamp down on recharacterized contributions. You used to be able to contribute to one type of IRA, and then if you decided later on that your tax treatment was actually better by flipping that contribution to a different one, you could recharacterize it and say, oh, I didn't mean to make that contribution. I meant to put it into this account, or vice versa. So nowadays, recharacterizations pretty much are limited to if you contributed to a Roth during the tax year and then you later found out that you're not eligible because of your income, then you would have to back that money out, and you could put that money into a traditional IRA. So that would be the recharacterized tradition. This should include any earnings on those recharacterized contributions as well. And this is calculated for you by your financial institution. So for everyone that's listening still, all of this is information that's reported to you. You shouldn't have to do any of these calculations. In box 5, this is the fair market value of all the investments in your account at the end of the year. However, if this is for an IRA that was owned by someone that passed away during the tax year, then this might be the fair market value on the date of death, as there are different tax rules that apply, and this might be of importance to either the executor of the estate or an administrator. In box 6, this is for endowment contracts. If you're participating in an endowment contract, then only the amount that would be allocated to the cost of life insurance would go here. So that is a subset of box 1. Most people probably, if you don't know what this is, it should be blank. And if it's not blank, then you could probably ask your financial advisor or whoever sold you that life insurance policy. In box 7, this will be checked based on the type of IRA this is going to. So you would expect to see that the account number for your Roth IRA would be matching up with the box Roth IRA, and then your traditional IRA would be lined up with your traditional account. Some people might enroll in either a SEP or a simple IRA, depending on their employment status. SEP IRAs are pretty common for small business owners or like single person LLC, small companies. A simple IRA is a different type of IRA that not as many people participate in. But if you have a small workplace retirement plan, there are less complicated rules around that. So boxes 8 and box 9 show any traditional or Roth, either SEP or simple contributions made during the tax year. So this would be made during the tax year. So in this case for 2024, it also would include any of those contributions that were made in 2024 for the 2023 tax year. However, if you made this either a simple or a SEP contribution in the early part of 2025 for the 2024 tax year, it would not show up here. In box 10, this does show Roth contributions or a rollover from a college 529 plan that you made during the tax year and through the tax filing deadline of the next year. So specifically in the Form 5498 instructions, it says you cannot deduct Roth IRA contributions on your tax return. Box 11, if this box is checked, then this means that you would need to start taking a required minimum distribution next year for 2025. So if you receive your 2023 Form 5498 and box 11 is checked on that, that means in 2024 you have an RMD. In box 12A and box 12B, we go into a little bit more detail about the RMD. So let's imagine that box 11 is checked. You might have an RMD date that lines up with your 72nd birthday. So let's say that you have to take the RMD. It'll say what the due date is in here. I'm just going to pull a date out. Let's just say that it's by the end of the tax year, and then maybe there's an amount that your custodian or your administrator would be required to calculate for you. So let's imagine that this is actually for the current tax year. So if this is checked, then if this is checked, this means that the RMD is required for next year. But if you had an RMD for 2024, then let's just imagine that you're required to withdraw this amount by the end of the tax year, and your RMD amount is $12,000. Generally speaking, your financial institution is supposed to provide this amount, and if this box is blank, then they should send it to you in a separate statement no later than January 31st of the year in which you're supposed to take that RMD. So in this case, if you had an RMD for the 2024 tax year, that RMD and date, the date and the amount would be reported on your 2023 Form 5498, or else it would have been reported to you by January of the 2024 tax year. In box 13A, this shows the amount of either a late rollover contribution that was made during the tax year and certified by you as the participant, or a postponed contribution made in the tax year for a prior tax year. So this would not be reported in either box 1 or box 2. But let's say that you had a $10,000 postponed contribution for the 2023 tax year. In box C, there are, or 13C, there would be a code based on that type of postponed contribution. So let's say that you were in a federally declared disaster area and your postponed contribution was due to an extension of that due date because you were in a qualified designated disaster area. You would have a code of FD next to that, which means you made a late contribution or a postponed contribution and it was fine because you were in a declared disaster area. If you were in a designated combat zone, of which there are currently 3 that the IRS recognizes as executive orders, you would see the executive order written for that particular deployment area. So this is the executive order for Afghanistan and other direct support areas. You would see this one for anything in the Arabian Peninsula and their support areas. This is the code for the Sinai Peninsula in Egypt. And finally, so if I said there were 3, there were actually 4 of these. For some reason, this is still on the books, and this is for Yugoslavia operations. So back in the 90s, we used to have a country called Yugoslavia, and then it broke up into a giant war zone, and now there's 6 or 7 different countries there. For some reason, we still have an executive order giving certain tax treatment to military forces that are stationed in that area. So if your postponed contribution was because of a deployment to a specific area that's been designated by executive order, you would see the executive order as that code. And then finally, if you made a rollover of a qualified plan loan offset, you would see PO. And finally, if you self-certified a procedure for a late rollover contribution, then you would see the SC. Box 14A and 14B are repayments. So if you repaid a qualified reservist distribution, qualified disaster distribution, or a qualified birth or adoption distribution, then you would see that repayment here. So these are all different types of distributions that you can treat as if they were a loan. So let's say that you took $5,000 out and it was for a qualified reservist distribution, and now you're repaying it back. You would see the code QR there for a qualified reservist. If it was a disaster distribution, it would be DD. And if it was a birth or an adoption distribution, then you would see the code BA. And this simply means that you put the money back into the account. Now, box 15A and box 15B, the IRS requires reporting on certain the fair market value of certain specified assets. So let's just say that there's $15,000. There might be, let's see, A is the code for stock or ownership interests in a corporation that's not publicly traded or readily traded on the open market. B is a debt obligation, so a bond that is not openly traded. C, this would be ownership interest in a LLC or some other company. D is for real estate. These are all You probably would not see these unless you are unless you have a self-directed IRA. So E is ownership interest in a partnership or a trust or a similar entity. F is for option contracts. G is for some other type of asset that doesn't really have a fair market value that's readily available. And then there can be up to 2 codes listed here. So you might see something like A for stock that's not publicly traded and D for real estate. But if there were more than 2 codes that were applicable, you would see H. And that literally means more than 2 types of assets of the ones that were listed A through G are in this IRA. So this is an informational return because it usually comes out the end of April or mid-May. It's not none of this information is required for your tax return for the year closed. However, there are tax planning opportunities that may present themselves specifically with Roth conversion planning. So, for example, if you made non-deductible contributions in prior tax years, but you don't have copies of IRS Form 8606, then you could use your prior year's Form 5498 to at least determine the amount of your non-deductible IRA contributions from each year. And then you can use that to do your Roth conversion planning strategy. We do cover that in a little bit more depth in our article. So that's all we have for this video. But we do talk about some of the Roth conversion planning opportunities, specifically for people who know that they've made non-deductible contributions in the past and want to avoid paying taxes twice because of lost paperwork. Take a look at our article and I'll walk you through how you can do that. So if you go to, you can go to the link in the show notes, or you can go to our website, teachmepersonalfinance.com, type in IRS Form 5498, and you'll see our article in the pop up if you type that in the search bar. So IRS Form 5498, you'll see the article up here. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel. And if you have any questions or comments, or if there's a topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.